Aloha and good morning, everyone. Wednesday's session was finally a session that I can get behind. I was happy with overall. Volume was higher on the NYSE and NASDAQ, but as you can see, it was below average. So this isn't perfect. There is no clear-cut sign to be extremely aggressive on new long positions. So I will continue to treat the signals as they come. They're basically half-ass, and they have been the entire summer. So I will continue to invest in them accordingly. I have the account capital to do this. I have the low commission structure to do this. If you are a new investor, new trader, I do not recommend playing the speculative long positions during the summer. Granted, the ones that are working right now are working very well, but still there's enough failing that it's still hit and miss, 50-50. So until we get through the halfway point of October, hold off on the speculative long positions if you're a new trader, especially if you're undercapitalized and your commissions aren't $1 per trade. Especially if they're more than $5 per trade, you just got to stop. I know a couple guys that are just they're really overdoing it right now. So pull back. Remember, the ideal way to use this methodology, if you have a small account, as long as you have $5 and under commissions, higher quality long positions when the market is right, like now, 10% per long position. 10% of your capital, 10 positions is the most that you should have long. You shouldn't have any more unless you start to do what I do and partial out of your positions with profit taking goals and stop levels. But just remember, invest accordingly. Right now, none of the signals are good. They're all half-assed, so keep that in mind. The first long position I want to go over of quality, AIR. AIR, I was interested in it following its earnings victory on 7-Eleven. Since then, it's pulled back about 50% Fibonacci retracement level of that post-earnings move. So I want to get long air, limit order 36.75. First cut loss level 36.20. Final cut loss level right here 35.28. Now I want to show you it's extended from its 20-day moving average, so I don't want to chase. This stock was only in my CanSlim quality scan. It was not confirmed anywhere except for my final tertiary scan. So it would be 2% for being CanSlim quality, even though it has a 66 EPS. The earnings and sales growth trajectory is correct, so I'm going to consider it CanSlim. But it's extended from its 20-day moving average, so it has to be half. At least earnings are out of the way. So 1% of my capital, AIR, 36.75, 36.20, 35.28, my stops. The next high quality long position, BATRK. This is my favorite technical chart pattern of the new long positions. Extremely heavy volume move through the 50-day moving average. BOP surged above all of the previous green BOP except for the initial max green BOP following the move off the June lows following the Russell reconstitution. But this takeout's beautiful. Nice price bar, nice volume bar, nice BOP bar, but there is that problem again with the 20-day moving average. It's not only extended from the 20, it's extended from the 10, and the 5 is not inside the real body of the entire candle bar. So have to invest accordingly. BATRK was only in my price volume BOP surge scan. That's a 1% signal. It's not CanSlim quality. It has to be halved. Only 0.5% of my capital. Getting long 24.24, not chasing the high day. 23.38 is my first stop right here, and then 22.76, the low of the last green BOP bar from the Russell reconstitution day, so it should be right there. There it is. 22.76 moves below there, I'll be completely out. Then there's LICO. LICO, I like this longer term chart. Love all the pocket pivot point signals recently. Love that BOP has steadily turned higher to green. Love it's bouncing right off the 50-day moving average. Love that everything's touching all the proper moving averages except for the 20-day moving average is trending lower. However, LICO has earnings on the 25th, so automatically you should forget about it. Everybody watching this video. Me, like I said, I'm willing to do it because, it only made my price volume BOP surge scan, so it's only 1% of my account capital. Earnings are next week, so that's only 0.5% of my account capital if I take the long position. So I'll go ahead and do it. I'll get long LICO. Limit order 94.24. I can chase it to the high of the day since it's touching its 20-day moving average, intraday price bar. First cut loss 23.38. Final cut loss back here. Excuse me. 92.22. Looked at the wrong number. My apologies. 92.22 right here. Final cut loss right here. 90.91. It moves below 90.91. I will be completely out of LICO, hopefully before earnings. If it stays true going into earnings, I have a feeling it's a possible gap up based on the previous uptrend. It's not guaranteed, but whatever. It's a couple grand to invest in this. It's not going to kill me if it doesn't work. Speculative long positions. Want to go with the best one, I think, but highest quality overall because of the sector that it's in. There's a big sector move going on right now in the energy names. REXX, pocket pivot point signal. Look at the bullish wicks on all these. Look at all the bullish intraday reversals, all the hammer candle patterns. Tons of hammer candle patterns ever since BOP turned green. The accumulation came back in the stock at the end of June. So we're kind of coiling here, making a series of higher lows following this bullish reversal hammer pattern. I'm going to get long, excuse me, REX 304. First cut loss level right there, 284. Final cut loss level, the low of the whole green BOP price action, 266. So 304, 284, 266. Then there's mixing it all up with all sorts of kind of signals. We go from the energy stocks, the oil area, to materials and construction. Very nice pocket pivot point signal following the initial pocket pivot point signal move off the July lows. It was this one stock made my max green BOP for 5-day scan and my price volume BOP surge scan, solidifying it as a new swing trade. Want to get long at 136, first cut loss 122. Final cut loss 113. With these swing trades, never forget if it violates the first cut loss level, REX, MNGA, and the upcoming ARLZ that I'm going to show. Remember, if it does so in heavy volume or loses the catalyst BOP indicator, then I'm going to be starting to cut losses and or cut all my losses before the final one comes into play. However, low volume pullback or max green BOP the entire pullback, the final cut loss comes into play. But MNGA 136, 122, 113, and the final speculative long position, ARLZ. ARLZ, almost the exact same kind of pattern as MNGA, except for this has more pocket pivot point signals. Got the pocket pivot point signal move, the nearly 50% pullback retracement level, and then the bounce off that support level above the 50-day moving average on above average volume with the BOP confirmation, green BOP, almost for the last 20 days if it wouldn't have had yellow BOP these 3 days here. But overall, good solid price structure. Want to get long at 152. First cut loss, this low right here, 140. Final cut loss, this low right here. Actually, this low right here, 126. You could lose this low right here, 127. But since there's only 1 cent lower and it has green BOP on this price bar, I'll be using a move below 126 as my final cut loss level. Only a grand in REXX, ARLZ, and MNGA. But overall, you know, this is not a great swing trade pattern here in ARLZ, but it's very nice with the proper reward risk ratio, especially if it can get back to those old highs. And the same thing with MNGA. It's not the greatest pattern. Look at the red BOP. I don't like that. But look at the reward risk ratio. If it can get back to those old highs in this chart pattern, look at this one, MNGA and ARLZ. You can see this one can go from 1 possibly to 5. I mean, that's best case scenario, but at least it is there. And MNGA, the same thing. It could go from 1 into the 5s to 7s. Best case scenario, I'm sure, but at least it's there. Look at REX. It can go from 3 into the 8s, the old highs in 2017. Best case scenario, but at least it's there. Especially with those contained inherent small risk, you gotta take it. So that's why I take all these longs, including Alico that has earnings, BATRK, which is sort of extended, and AIR, which isn't quite canceling. They're good enough, they're just not great.